Good morning, everybody. Welcome to another live episode of Local-Ruston. I'm Justin Underwood, your marvelous mortgage guy. This is James Douglas.
Top of the morning to you.
How's it going, my friend?
So far, so good. I'm wet. Are you?
I think it's rained since we ended the stream last week.
Just once.
It feels like it.
One continuous time.
Yeah, that makes sense. I'm actually enjoying a little bit of the rain myself, but
Sure.
After today, it may have overstayed its welcome.
Yeah, for a lot of people. I think yesterday a lot of people got a little scared around.
Yeah.
So some flashbacks from 2016 maybe.
Yeah, anytime my wife starts sending me videos of the front yard, I'm like, uh-oh, what's going on?
It was fun. I got to look out the window and watch water running down the road. So
I definitely have a gutter that's not working. It's starting to droop and it's not draining, so I've got to get that fixed.
I have multiple friends that have roof issues. And for real estate, hey, if you're in the middle of buying a house,
Yeah.
Go to that house now and see how the water issues are. It'd be a great time to learn something about your new property.
You want to view a property at its worst if you can,
Sure.
from a weather standpoint.
Yeah.
So that makes perfect sense.
And traffic. You would like to go by that house
7:50,
yeah.
8:15 in the morning.
5 o'clock, 8. Yep. Do the whole thing. You want to know the ins and outs of that property.
That's like veteran home shopping.
Yeah, no, and it's easy. Like you can just drive by and do those things, so you don't have to, make an appointment and go inside and look. You can drive by and observe. So do it.
Yeah, we're probably a couple minutes in. We haven't said our topic yet, but our topic today is going to continue from last week where we were talking about loan types. We're going to talk about one of the more popular ones. This is called conventional loans.
It may be the most popular, huh?
I mean, from a percentage of loan standpoint in your primary permanent mortgages, yes.
Yes. And so, let's just take a little quick. Last week, we talked about rural development and FHA. And so the first few minutes of that got cut off, and that's my fault. James made some last-minute mistakes, and so for 6 minutes of that, no sound, so I'll take the blame for that. But if you have questions about that, if you go back and look at that, call Justin, your loan officer, your real estate agent, if you need to know if a home is in one of those areas.
Yeah.
FHA is any area, but rural development.
Maybe.
Yeah. So anyway, call your local professionals to help you out in that area. But we're moving into a conventional loan, which sounds a little boring, Justin.
I know it sounds boring, but it's really not. So you're gonna want to hang around because conventional loans, there's still some myths around it, in my opinion.
Oh, I'm sure.
Yeah, I mean we could start with first-time home buyers.
Okay. Well, hey, let's start with one myth and then move to first-time home buyers.
Sounds good.
Because first-time home buyers have this perception of what it takes to buy a home. And a lot of people have different perceptions about what it is. But when I was young, I just assumed I had to have 20% down and have all of that money, closing costs, 20% down. Like I had to have a lot in order to be able to purchase a home. And so that was my thought process. Because that's what my parents had to have.
Right.
That's what my parents were told they had to have, and when they got their original loan, that's what happened.
Right.
And so, is that true?
People still believe that.
Sure.
I still get that. Oh, well, I thought I had to have 20% down to do that.
Sure.
And the answer is no, emphatically no. Okay.
Most people don't put 20% down.
Here's the thing. Right now, Origin Bank has a proprietary conventional loan product that, if you qualify, it's no down payment.
Wow.
0.
There you go. Well, myth busted.
Myth busted. But here's so minimum down payment for conventional loans for all borrowers, regardless if you're a first-time home buyer or not, is 5%, which is a great low down payment.
Sure.
Just to be frank, it's a really nice sweet spot.
Well, let's do the progression. We talked about rural development that was 0 down.
No down.
We talked about FHA that was 3.5. and now we're moving to a conventional
non-first-time home buyer is 5%. And I keep saying non-first-time home buyer because of the 3 loans that we just mentioned, conventional, FHA, rural development, the only one with a first-time home buyer benefit is conventional.
Well, there you go. Hey, what does it take to be a first-time home buyer?
This is what's interesting. It's actually really poor language because it's not that you're a first-time home buyer.
Right.
It's that you have not owned a residential piece of real estate in the last 36 months. And it gets even more kooky.
All right.
It means that one of the borrowers has not owned a single-family residential real estate.
See, I did know the 36-month thing.
Yeah, so if you have a borrower that has owned a home or already owns a home, and a co-borrower who does not or has not in the last 36 months, you can still do a down payment as low as 3% on a conventional loan.
That's pretty cool.
Isn't that cool?
Yeah. So, hey, if you're on the line of deciding to buy a home or not, and financing is the big issue,
right? Then
you need to pay attention to these loan options.
I'm going to tell you that most people show up from an application standpoint, or even calling you as the realtor to get started standpoint, with these different pain points in their mind that they're afraid of, right? Yep. And down payment tends to be like one of, if not the biggest one. And that's why terms like first-time home buyer are really like trigger ad words more than actually useful language for the consumer, because the advertisers know that that's a big pain point.
Sure.
And I'm going to just tell you that vast majority of the people that come and sit down in my office, funds available to close ends up being one of the smaller issues that we have to discover.
Okay.
Most people don't move forward to home ownership from the perspective that I have is typically because of credit or income.
Yes.
Not because of down payment or closing costs, because there's just ways in which we can work around those, and there's options out there. And once you start thinking through them and you're motivated to buy a home, that thing tends to take care of itself. Yep. But for conventional, to not get completely off topic, the minimum down payment is 5%. For first-time home buyers, 3%. And in some cases, if you have a proprietary product like Origin does at the moment, it's no money down.
So what Justin's saying is not every bank is going to have the same loan products.
Correct.
So every lender is not going to have the same exact loan product. So your lender.
Yeah, like our conventional loan product, we call it Welcome Home. It's a limited, there's a certain pool of money available, and when it's gone, it's gone.
Sure. So what does conventional mean, Justin?
Yeah, so here's what it means. You got private lending, and then you got government insured lending. Okay, so a conventional loan means that there's no government insuring. We don't have FHA, USDA, or VA insuring the risk of the loan. That means the risk of the loan is based off the merits of the loan. And to say that simply, conventional has a lower appetite for higher risk situations, where FHA, USDA, VA has a bigger appetite for more riskier factors in a loan.
And when you say riskier factor, you are not talking about riskier factors in the land or home or that. You're talking about from the consumer side.
Actually, I mean, I'm yes and no. Okay. The primary risk factors that conventional loans are really looking at is credit score.
Yes.
Debt to income.
Yes.
Being the primary factors. And there is a strong belief that conventional is okay with riskier property conditions, and that can be debatable, and we can get into that.
Sure.
But the perception is that if a house has issues, you would rather go conventional than go government insured loan.
Yeah, we talked about some of that last week with the condition of the home. Basically, I think we coined that as it needed to be move-in ready for your FHA rural development.
And VA.
And yes, and we have not talked about VA.
That needs to be a whole
It probably does. For you veterans out there, it's a really, really good loan product.
It's a benefit.
Absolutely. And so I think we need to handle that separately from both sides, not just the lender and lendee, but
also realtor.
Yes, the realtor side. So conventional sounds great, but tell me qualifications. Like why would someone that, hey, I can go get a FHA loan for 3.5%. Why would I want to come over and give 5% down instead of the 3.5%? That
let's say we work through the down payment issue and we're okay with conventional at 3% or 5% or FHA at 3.5% or not.
Right.
Conventional does not have a funding fee, which all the government insured loans do for the most part.
Okay.
Which is I like to consider it actually a hidden fee because you don't feel the pain of it the day of closing, but it's rolled into your loan amount. Conventional does not have that. So that's additional revenue that's not created for a conventional loan to offset risk issues. Example, you might actually get a superior rate, meaning lower rate in a government loan, but you're paying a funding fee that offsets the risk, where conventional's managing that risk through the rate. Right. That's one. The second is mortgage insurance. Mortgage insurance for a conventional loan is actually not provided by the lender or by Fannie Mae or Freddie Mac. It is a private third party that provides mortgage insurance. It's actually something we shop around to see if we get superior pricing.
Right. So what I'm hearing is that it's possible that the primary mortgage at PMI would be lower cost-wise on a conventional loan.
It's lower if the credit score and risk factors are superior. So if the credit score is higher, it's cheaper. But if the credit score is lower, then FHA, USDA can be cheaper.
Okay. All right.
And so it's kind of like a sliding scale.
Sure.
And basically your lower risk loans get overall better APR pricing, like the true cost of the mortgage,
and
on a conventional side.
This is something that I believe that word, APR, is not something that is considered by consumers.
Not enough.
And if you have a good lender, it will get explained to you, but I don't know that every lender is out there explaining this because most people just look at that interest rate. Like you're just looking, hey, can I get the 3.25, and the guy down the street is going to give me a 3.5.
I'm telling you, everything in me wants to derail and talk about rates right now and APR because it's such an important topic, and I literally just watched somebody save $7,000 because they sat down and asked another lender a question.
Yeah.
And so that is a topic I want to cover, but to stay for conventional, the understanding is that sometimes just because a loan has a slightly higher interest rate doesn't mean it's not cheaper.
Right.
Like the actual math, like real math.
Yeah.
Not
if
just
you're paying points up front or
higher PMI or the funding fee.
Right. Those all play into your payment every month, and the interest rate is only one part of that.
The other thing is with so we use the term PMI, and we use it because it's private mortgage insurance, but that really only exists in the conventional side. We mentioned this last week. On the government side, it has a different term. Yep. Mortgage insurance premium, because it's not private. It's government insured, okay? Meaning the taxpayers pay taxes, and we actually are helping fund, the growth of our country through housing and home ownership, okay? Now, with the private mortgage insurance on the conventional side, that will actually go away automatically at 78% of the loan balance. It can go away at 80%, but there's a couple of steps that you as a borrower or homeowner have to take to get it removed, including ordering a new appraisal.
New appraisal, yeah.
But with a government insured loan, with minimum down payment, the MIP or the mortgage insurance never goes away. So
and that's a big deal. Like, give us an example of how much would MIP or PMI be on.
Let's go back into the COVID low interest rates. Okay, let's say you gave me a call and I said, hey, I actually think you need to be in a conventional loan at 3.125 on a 30-year fixed rate because I don't know you're going to be able to refi this at any time in the future. This may be the lowest rate we ever have. Yeah. And you're like, well, my buddy got 2.75 at this other lender. Well, great, but it was an FHA loan with PMI for the life of the loan.
Yeah.
We're talking about on a $250,000 loan, we're talking about like $175 a month. So that never goes away. Well, you got a better rate, you can brag about it, but you're paying for something that never leaves the loan. So the true cost of the loan
Is the 175 real, Justin? Did you just pull that number out of thin air, or is that legitimately what
it is not? It's not exact, but I'm just saying it's a lot. Okay, that can be removed.
Never
from
paid that much PMI.
Oh, you've never had an FHA loan then?
No, I have not.
Okay, let me just tell you, FHA is a great loan. It allows for things that would prevent borrowers from getting approved on the conventional side. But the mortgage insurance is one of the reasons why you can do those loans, because you're offsetting the risk with additional costs outside of the interest rate.
That hurts for some of my people.
If you're getting an FHA loan, you typically either know you're only going to live there 3 to 5 years, or you have a refi strategy.
Sure. And a lot of people are listening to guys on TikTok, and they're buying FHA homes to refurb or to live in for a certain amount of time for income, and so yeah, maybe it works for that.
Well, I mean, if you come in and you have a 635 credit score, let me just tell you, that's going to be the best price. It's going to be, and because conventional gets too expensive to obtain qualifying when you have a lower credit score. Okay, so that's the purpose and the solution that FHA creates. There's some other things that go on there that's just too complex here when you get into work history and all this kind of stuff. Right. But conventional is a superior loan product if you have superior credit. Okay.
Well, we talked about last week with the government-backed loans how to qualify the individual and the home.
Correct.
And so what kind of stipulations or parameters are there around the home itself and
so with a government insured loan, there's a minimum property conditions requirement.
Sure.
Okay, and so the appraiser knows going in, hey, it's got to meet these minimum standards. Okay, but with Fannie and Freddie, it's a little bit more of a gray area. Okay, in terms of what is like specific. Yep. But when the appraiser goes out into the property, they have a requirement now to disclose any deferred maintenance issues, safety and sound or structural issues. And so that means we're trusting the appraiser to just reveal and deliver the information back while still producing, for the most part, an as-is appraisal.
Sure.
Okay? But when the underwriter reviews the disclosed or revealed conditions, the underwriter now reserves the right to require repair.
And we are in conventional loans now.
Only this is in the realm of conventional.
Yes.
So let's say there's rotten wood. And the common thought is, well, that can't go FHA, USDA, or VA, and that they're correct, and for the most part.
It can if it gets repaired.
It can if it gets repaired. It just means it needs to be addressed prior to closing. Yeah. With a conventional loan, generally a realtor goes, well, we have to go conventional because of this. Well, you can go conventional, and maybe the appraiser deems it not as an issue.
Right.
But if the appraiser makes the underwriter aware, the underwriter now has the right to require repair.
Sure, and that's at the bank, like that.
Well, so Fannie and Freddie say the discretion is given to the underwriter, not just the appraiser, to make minimum property condition requirements.
Okay, so that would be kind of the gray area that we're talking about. What about who qualifies as a person? So, are there minimum credit scores? Debt to income, what type of person is looking at a conventional loan?
Yeah, well, all people have these loans available to them, just to be really, really clear. And if you're talking about credit requirements, and you're talking about like minimum credit scores, where FHA doesn't actually technically have a minimum credit score.
Sure.
Yeah, but most lenders are going to be 580 or up.
Yep.
Conventional does have a minimum credit score, and it's 620. Okay. Now, 620 is having a score that low for conventional. It's difficult to get approved. Now you're actually having to rely on factors that reduce risk, such as a large down payment. Meaning, even though conventional allows for a loan down to 620, if you're trying to do a 3% conventional, you're likely not going to get what we call approved findings. Okay, so it's a bit of a tug of war of managing risk, okay? Sure. So generally, most conventional loan borrowers are going to be 680 and above. if you're looking at when it becomes a better loan compared to other loans. But again, there's so many other factors.
One of them, it's an individual.
It is literally every customer that comes in is a fingerprint. They're a snowflake.
Okay.
They're all every situation is different. Where we live in Louisiana makes whether or not you go conventional or a government insured loan different than you would in another state.
Sure. Because
we have community property laws, and there's very particular guidelines that speak to if you live in a community property state, then this, that can actually make a conventional loan superior. So it's not easy to do any kind of blanket statement of when one goes this way and one goes that way, but that's why I like the word appetite. Conventional has a much bigger appetite for higher credit score loans.
Sure.
Plain and simple. When you have lower score loans, then the bigger appetite shifts to the government insured loans.
Okay. So I can, with conventional, go buy a $3.2 million home.
You technically can, okay? But your down payment requirement starts to shift quite a bit. So where FHA has a max loan amount of $420-something thousand,
right?
In the conforming conventional world, the max loan amount is going to be $642,700 or $647,200.
And that number has changed significantly in the last 2 or 3 years.
When I first got in the industry, it was $410.
Yeah. So I mean, and that number has just jumped even since COVID, right?
Yeah. So it was, if you like rolling, it was in the 530s.
Yes.
And then it skyrocketed to $647,200, I believe is what it is.
And so what if someone wants a $648,000 loan on a house?
Well, the good news is even with a minimum down payment of 5%, we would drop below that loan amount. So loan amount and sales price, not the same thing. So
that really is the loan amount that Justin's talking about, not the sales price.
Not the sales price. And look, as a realtor, your mind naturally goes to sales price when you hear $647,200. But it's actually, so you would put that in your calculator and divide it by 0.95 to get what an actual sales price would be. So it depends on what your client's going to put down. Sure. Oftentimes when you get into the higher end homes, there's generally a little more down payment available, and there's a desire to do that. Like they're selling their fourth home and they've built up equity, so forth and so on. So you'll see these sales prices of $700,000-800,000, but they're really still in the conforming loan because the loan amount's below $647,000
because of the down. So if someone didn't put down enough to go down below,
let's say they needed to borrow $1 million to buy a house.
Correct.
Yeah, we're going to be in what's called a jumbo product. Okay,
yes.
And jumbo products differ because you're getting into overlays depending on where you're borrowing the money. Okay. But generally speaking, you're going to need 20% down, and you're going to want to have a credit score well into the 700s.
Yes.
Generally speaking.
And you would want to assume that someone buying a home in that price range more than likely would.
Well, so it's just managing risk.
Sure.
Yeah. So the lender's saying, hey, we have a riskier loan because we have one house that's carrying a lot of debt, and there are fewer buyers for those houses. Sure. And generally, whenever an economy drops, it's the top that suffer first. A lot of people, not like in the social sense, but in the housing sense, those prices tend to drop first.
Okay.
And so, as a lender, you've got to really manage that risk.
Well, sure. And maybe one day we just talk about higher end homes because there's a lot going on there. If a higher end home is listed at $1 million and sells for $850,000, that if I lost $150,000 on my home, that's a lot.
It'd be the end of the world. Ah.
And so, but when we get into a higher range home, it's
the percentages.
The percentages are not as
they're different. They're just different.
Right. That's a 15% drop.
Yeah.
Which on my home, if I did 15%, okay, I can take that.
Right.
But not $150,000. Right. So, well, Justin, thank you. Yeah. I believe that when we do VA loans, it's going to be very educational for some people. conventional loans versus rural development versus FHA. It's a big topic, and that's why we've broken it into multiple.
And really, the desire isn't to do a clinic on conventional loans. It's just to make you aware that there are options out there, and you really need to be working with an expert because these things get pretty complex depending on what you bring to the table. And every borrower literally brings something different. I say this all the time, and I'm going to say it now. The word site has its roots in meaning that no two properties are alike in all the world. Yep. So it doesn't matter who shows up. Every property is different. So we already have that in the equation. When we start coupling credit scores and job histories, sources where funds are coming, it starts to get really complex really quickly in terms of every loan being different. And you need to work with someone who's able to take all those components and put it together and put a strategy that puts you in the best loan possible for your home ownership needs.
Yes. So just realize interest rate, it's a big deal, but it's not the only deal.
It's the lure, my friend.
Sure.
It's the lure to get you on the hook. And that's, again, we're going to do a rate conversation one day, and it's probably going to be very educational for a lot of people. And rate is important. Rate is important. Rate is important. It's not the most important.
Yeah. It is what marketing, especially online lenders, are going to dangle in front of your eyes to get you to choose them.
Well, if my friend would have taken the bait, so to speak, on the last deal, it would have cost him $6,000 for the same rate somewhere else because of how they dangled it. So.
Sure. And that happens every day.
Mm-hmm.
Thank you for that, Justin. Conventional loans is probably, like we started, the most common.
Yeah.
It is a very good product.
It's wonderful.
There's actually a lot of different products under the conventional title, so talk to your loan officer.
We didn't even get into our conventional renovation loan.
No,
we'll do
that's
another day.
Yeah, there's a lot. I don't think there's a lot of renovation happening today with the ramp. So
right.
There's a lot of guys staying home from work. But all right, Justin, we're going to have to move to top five.
Top five, let's do it.
And we're going to start with a conventional loan.
I'm not surprised.
Actually, 3 out of the 5 today, according to records, were conventional loans.
Oh, well, then they're neat.
Yes. And, well, we're not going to talk about the other 2 on a separate podcast, but we'll talk about it today. All right,
Sounds
number
good.
5.
Let's go.
$335,000 in Choudrant, Louisiana.
Choudrant?
Roy Wade Road is new construction, $180 a foot.
Okay. Still a very strong price per square foot, but we haven't dipped into the 300s in the top 5 very often.
No, and we're there for the bottom 2 this week. Like it was a lower end. I don't know. Market's definitely got its ebb and flow, and so
we're not going to overreact to it, but we definitely need to react to it.
But the first 2, new construction, both number 5 at $335,000 in Choudrant. So congratulations, Ashley Robertson.
Good job, Ashley.
At Lincoln Realty. So call Ashley. But also number 4 on Rhodey Drive in Ruston.
Oh, man. Lincoln Parish is just dominating us.
Oh, Lincoln Parish is dominating again this week. $346,000.
Nice.
New construction. Now, this is $195 a foot.
Okay. So what got it the other $15 a foot?
Well, this one was finished. And when I say finished, outside, it had landscaping done, it had the fence done, and this was a brick home compared to a siding home, and, well, the location also.
Yeah, that too.
So
sound like they got a lot for the other $15 a foot then.
Yeah, no, both of these homes are nice homes. This one's about 100 square foot smaller than
and that factors in too when you have less of something, the concept of diminishing
this
returns.
one sold for cash.
Cash, and who is our realtor?
Good. Thank you, Pam Jones.
Good job, Miss Pam.
Yeah, at Orchard Realty. Yeah. So, call Miss Pam if you need something. All right, moving back to a conventional loan, number 3, Gretchen's Walk.
I know this one well.
Yeah, in West Monroe. It's got a little circle drive. It's a nice, if you know where Gretchen's Walk is. Larry Toller sold this.
He was.
I like Larry. We can't be around each other too much without cutting up. We get loud and say things we shouldn't. So
that sounds like always Larry.
Yeah, no, it's
He's fun.
he's definitely a fun guy. $162 a foot.
Yep.
Built in 2007. Got a saltwater pool. Just a
That's our neck of the woods.
Yeah, it's just right around the corner from both of us. It's a nice home. Good job, West Monroe. Good job, Larry. So, all right. Number two, Monroe made the list.
Oh, man.
Bramble Drive.
Great street.
It's off a park. $460,000.
Seems like par for the course for Bramble, to be honest with you.
It does seem like par for the course. There's one oddity I thought on this. It's only on the market for 28 days, but it's sold for $15,000 below ask. So it was listed at $475, sold for $460, but it was only on the market for.
Yeah, if I was a real estate agent, appraiser. See, I don't know who I am. If I was an appraiser, I would be calling saying, "Hey, what was going on with the seller?" You know, it seemed like this was rather motivated.
Yes, I mean you could definitely talk about if there was something going on with that. It could just be that they were well coached in the market and saying, "Look,
no showings the first week, and then
let's just do this. Let's get it going." You don't want right now. You really don't want houses sitting on the market too long.
So I think what I'm visualizing is the market. You can't let it come to you. You got to go to it today.
Yes, you are going to get feedback from the market. What you do with that is up to you.
Got you.
And so today, Kathy Patrick sold this.
Excellent.
She has got her thumb on the market, and I can almost guarantee you that she was coaching them, saying, we don't need to play around with any offer. And so good job, Kathy. Good job on the sale of this home.
Excellent.
It's, like I said, $15,000. If we're talking about a $150,000 home and you drop $15,000, it's a bigger deal than the $475,000 home. So great job, Kathy. Has a nice outdoor living area on this. This was a great home, great area in Monroe. All right, well, we made it up into the 500s for number one.
Number one.
I like that. That's good. Thank you, Rick. Appreciate that.
All right, who's our number one?
Number one. We've already been on this road before in the top five. Is Lanyap Drive in Ruston. It's off of 33. You go 33 north.
Yeah.
Take a left, or about 2 or 3 miles north. $548,000 cash.
Yeesh.
So
Straight
cash is king. This was listed at $570, sold for $548. But I don't know. Days on the market.
It was very low, wasn't it?
Yeah, it was like 2 weeks.
I looked at this 13 days.
13 days. And
I envision they just showed up with the briefcase of cash as the offer.
Yeah, I mean,
it wasn't even a negotiating period. They're like, here's the money.
Yeah,
And then
I have heard people wrote in the offer like the deposit being the entire amount of the house. So like, I'm gonna give you the deposit check for $548,000.
Oh man, that feels risky.
Yeah, it does.
There's some very interesting deposit language in there that I would not want. All that.
$188 a foot.
Right.
Great home on a nice little road north of Ruston. I mean, it's a North Ruston
near
home.
the park.
Yeah.
Yeah.
No, it's nice. But
Who's our
so
realtor?
people out there hearing cash.
Who's our realtor?
Oh yes, well, Amelia Cooper Smith.
Miss Cooper Smith. Great job.
Yes, with Cypress State Realty.
Man.
Good job. But people hearing, hey, cash for 500 something. Look, they may have sold a whole bunch of things, and it may have not actually been cash.
Yeah.
It could have been a bank loan type thing. So don't worry. You're doing well. You live your life.
Right. You know who does have cash to lend out? That's Origin Bank. Feel free to give me a call.
I agree. So call Justin whenever you need to. Yeah. And call me if you need any help, if you have any questions that need to be answered real estate wise. I love answering questions. Text, call, message, throw up a smoke signal, something. We will get you an answer to your question. And if I don't know it, I'll ask Justin.
Yeah, sounds like a plan. Well, everybody, that's been another episode of Local Wisdom. James, thank you as always. I really do
Justin.
appreciate you. We got Rick behind us. We're at Catalyst. Okay. We're having a good time. Again, leave us any messages. But as always, I hope you have a marvelous day.
See you next week.